India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, middle of the week. Markets are a little tepid, globally speaking. They've had an up and up kind of a journey. The US, that is specifically here in India, we saw a bit of a breakout move. So can that sustain? That's the question. I'm Prashant. With me, my colleagues Nigel and Survi. Guys, good morning.
Hi, good morning.
Morning.
And Nigel, good to have you back. I guess we're dealing with global cues that are not fully supportive today. There's been some profit taking across the board. We'll see how it goes. Because even yesterday, I remember in the last half an hour, we started giving up a little from the top. So interesting right ahead.
Well, that's right. So that buy on dips thesis will be tested. Let's get straight to the action.
Absolutely. And actually, in the US markets, it was not really this way or that way. It was a little lower. So obviously lower is lower. But it was not backed by volumes. For example, I didn't see the volumes last night, but the day before volumes were 50% lower, as compared to what we had over the last 20 days. I mean, the 20-day average. And I suspect yesterday as well, it was far lower than what you usually see. So these moves that you're seeing in the US, and by the way, that holds true for the move up as well, and of course this pullback as well, is not really backed by all of the market participants really sort of pulling their weight. But in any case, I mean, price action is what it is. So U.S. markets ended lower after 8 consecutive daily gains. S&P down about 0.2. The Nasdaq down about 1/3%. Russell 2000, there was a bit more sort of damage there, 1.25% lower. Now, a fair bit of moves on, yields, etc. The Treasury market, the 10-year yield lost about 6 basis points. We're at about 3.81. So that's interesting. The euro rallied. The euro USD reached a new 2024 high of 1.1125. As a result, as a consequence of that, the dollar index, which is essentially the dollar as against a basket of currencies, that slipped once again to 101.39. Again, I mean, something which I think is good for emerging markets broadly, but I think yesterday's impulse move was, of course, on the back of what we saw on the euro, which has got a large outsized role on the dollar index, if you look at the dollar basket. Up ahead, we will see the US, that is, will watch for data. There is some later today, but nothing of consequence. I think Fed minutes come out later today, tonight in the US. But the big ones are the flash PMI numbers, which will give you a sense of how the economy is doing. And then, of course, the Powell's speech at the Jackson Hole Summit, that is only on Friday. And, of course, markets will, unless and until it's really, it's not Jackson Hole, a lot of attention which is paid, and the snowy mountains and, the speeches and the programming, etc., which happens from there. But it's not something which has moved markets that much. Or if you go back last 10, 15 years, maybe once or twice. I think 2021 was one of those Jackson Hole summits where markets moved meaningfully. But are we at that stage? We'll see. I don't think so. Gold rallied as well. It set a new record high. I think it got to about 25.34 and then pulled back to about 2,500. And that's, again, something which is worth noting, especially here in India. Oil prices, they are now down to about $77 a barrel. They've been on the back foot. OMCs, oil companies, etc., were in focus yesterday. Now, where does all of it leave us here in terms of levels? So the Nifty yesterday closed above the upper end of the gap area. Although by close, we did give up about 40 points from the day's high. The day's high was about 24,738, 740-ish was the high, and we left off at about 24,700. So a little off the highs. But we've sustained above that gap area, which is the most important thing, and we need to do that. Not give gains, not let the Nifty sort of slip below that once again. On the way up, and I said this yesterday as well, the path to a new all-time high and the earlier all-time high, which is 25,078, clears up. You can broadly see the outlines of it. It perhaps will take time. It's not very far away. In booming markets, it's a two-day job. In not-so-booming markets, it may take a little bit longer. Supports come in at the 20-day moving average, which is the 24,500 mark roughly, 44.88 to be precise as of yesterday's close, and then the 40-day exponential moving average under it, which is 24,218. The Nifty Bank finally sort of got its head above the 20-day moving average. It had struggled under it for a while. Yesterday, we got a close above it. Not a very decisive close, but a close above it nevertheless. And here, I mean, you're basically looking at next targets as the 40-day exponential moving average, which is 50,865. And there is a falling trend line, and the Bank Nifty will meet that trend line at 51,410. So these are the two next levels on the Nifty Bank. Supports come in at the Monday's low. That's a simple kind of, a low that you look at on a daily basis. 50,283 is that number. GIFT Nifty will indicate what the start is going to look like. It's a flat, absolutely flat start, 18, 19 points lower. Surabhi.
Absolutely, and I guess flat is not bad looking at how a lot of the Asian markets have opened out, because many of them are down between 0.5% to as much as 1%. I was actually looking at the move in the currency space in a little more detail, and there are all kinds of narratives. One narrative on this dollar's persistent weakness is that perhaps, this is a bit of a, Kamala Harris winning, Trump losing kind of a, build-up that's happening, because the market seems to be believing that Trump's policies are going to be more inflationary and Kamala Harris's won't, and therefore that could have a bearing on Fed policy. Anyway, when it's election season in the US, all kinds of theories doing the rounds. But the short point is that the dollar index is at an 8-month low. The last time we were below 101 was in December. So we're still not below 101. Let's see how this one goes. The DXY is down about 2.5% in August. And this is despite the improvement in data that we've seen. That same data helped the equity market snap back, but not the currency. Jobless claims, what we saw in services, and of course, the retail sales print. So that repair did not happen in the USD. It happened only in the equity screen. So that's something to keep in mind. By the way, the dollar yen remains in focus as well. And the dollar yen, there versus the yen, the dollar continues to weaken even more. We're seeing levels of about 145 once again on the dollar yen, so need to watch that. We've had export-import data out of Japan this morning. It's a little mixed for the month of July. Exports have grown, but not as much as expected. They've grown about 10.3%. The number looks really good, but the expectation was over 11%. Imports have surged in Japan. Imports are up almost 16.5%, which is more than expectations. So that's just a bit on the Japanese data. Let's come back home and see the cues over here. As usual, FIs are still on the sell side, barring that one day, I think it was Monday, when we had a positive figure come through, which was Friday's number. The rest of it has been negative, so we're still down about 1,500 odd crores on the FII front. Domestic institutions net buyers of about 2,200. In terms of individual pockets, stocks and, corporate action that will be in focus, I'll watch out for telecom, because we've got the numbers in. Jio is actually slowed down. The pace is slowed down. The addition, and if you look at it month on month, there's a loss of about 2.8 lakh subscribers. Bharti has continued. Flattish trends, minor increase month on month. Voda Idea still losing customers. It's lost about 8.6 lakh, which is not as much as how many it lost. In the last month, it was 9 lakh, over 9 lakh customers lost. This time, it's just about 8.6. So we'll see how that goes. But the big story in the focus is going to be Cyient. Cyient is going to do a large block trade. It's going to sell about 14.5% stake in Cyient DLM. The rationale is that they need to pare down debt and maybe they'll invest more in M&A. But it's a big block trade, so let's see how this goes. I think it's going to be a natural individual stock action, and that has been the case last couple of days. It really keeps the market busy. Well,
that's right. And give and take everything, you'll have to lean towards the long side rather than the short side. Now, going by the cues, the weaker dollar index as well, and this market has been trending up. Well, yesterday was a good trading session. In fact, there was a bout of short covering that did take place. So besides the cash market flows, you saw on the Nifty, the open interest is down by close to 2%. On the Nifty Bank, there was a bigger bout of short covering that did take place because the market moved up and you did have the Nifty Bank that was lower in trade. What do the FIs do? Well, it perfectly ties in with the data points that we're looking at. They covered 18,000 shots. They added close to around 8,000 long. So that's a swing factor of around 26,000 contracts. They remain net long, but mildly so. So if you just pull up, both the FI as well as the clients, both of them are net long on the index with around 26,000 and 35,000 long contracts odd. And on individual stocks as well, they've maintained their long bias. Well, moving to, the options data, there appears there's a bit of a strategy in place at around 24,700 call as well as put. What is that? It's likely to be a short straddle. When you write the same strike, the call and put, you pocket the premium of roughly around 200 rupees and you're bracing for a bit of a range. And this contract expires tomorrow itself. So if you take 200 rupees and you add to the 24,700 and you deduct from 24,700, you're getting the broad band on the Nifty. On the lower side, you're looking at around 24,500. On the upper side, you're looking at around 24,900. And the level should come up for you on the screen as well. The 20 DMA is closer to around this 24,500 mark. If you get past this level, then you're looking at fresh all-time highs, which is above the 25,000 odd mark. But today, the Nifty Bank will particularly be in focus. It had a bout of short covering yesterday. It ended close to around the 20 DMA. You wanted to hold above the 20 DMA. And yesterday's high was important as well, at around 51,000. That's the highest you've seen in the last couple of months. Finally, stocks that we're looking at, a few of them came out of the F&O band, so I'll keep an eye on that. You had Chambal Fertilizer, India Mart, you had NMDC, as well as PNB. All of them came out of the F&O band. We've been making this point that a large number of stocks in the F&O band, some of them come out. Expect some action on some of these names.
All right, Nigel, thank you very much for that. So that's a summary of everything you need to know as we begin this Wednesday morning.